Good afternoon. This Tuesday, January 28th, cattle market on fire. And so today's video is exclusively on the cattle market and the potential logistical, mathematical, and probabilities that come February, something can go haywire, and also percentage potentials of what these pullbacks can look like. And so we're going to walk through the various charts, first feeder cattle, then we'll show it on live cattle. And you're going to be pretty much amazed at what you see on these charts and how with the upcoming events that are standing right in front of us, something could maybe even occur sooner. This Friday afternoon, January 31st, is our annual inventory report. Now, right now, the average expectation is for a herd steady with last year, but that's not the whole story. You've got some like CattleFax looking for a couple 100,000 head reduction in the herd. Then you have some thinking that it could be a couple 100,000 head more, which, of course, you put the two together, your average is unchanged. Well, what if Friday afternoon we get a herd side put out that there is expansion, something occurring, nothing monumental, but just anything of expansion thoughts will start to cause the market to contract like it did in 2015 after the 2014 run to the upside on those cattle prices. And then we could wake up Saturday morning, and what if President Trump chooses to, well, maybe we won't put the tariffs on Mexico of 25%, because right now, even though logistics are being worked out, that port of entries will be opening for Mexican feeder cattle in the next week. The trade is like, well, who cares? Because these feeder cattle come with an added cost of 25% on a value-added tax, so to speak. So if that was not to occur over the weekend, then we could have a pretty rough Monday morning opening if A, the herd showed some slight expansion in the inventory data, and B, Mexico is not hit with tariffs. Now, I'm not saying here that I know these are factual. I'm just saying these are probabilities you must be aware of, because that's what risk management is all about. So let's take a look at some of these charts now and see what we can deduct from what the past has done. And of course, remember, we are told to tell you past results are not indicative of future results. Yet, your credit score is based off the past. Try to take out a loan without past not being indicative of your future ability to pay for something. You get my point. We can go on and on. So this is just important information you should be aware of. All right, first we're going to start with the feeder cattle continuation chart. And our current present run is getting extended. We have been discussing how we had a 1-2 wave, and now we're doing 5 waves in a wave 3. That should be close to culmination. We originally targeted 276, but had said we could go extended, because since 3 and 1 were the same length, 5 could go extended. Now, a simple 1.5 extension takes you to 286, but you've got, those that like to ad nausea talk about extensions at, well, you've got a 214, 238, 25 like we're utilizing, or a 2618, a 2786, or 1786. There's all kinds of them. I had just found over 30 some years, extensions typically run 1.5 times the length if it's more than one. So that would imply a potential yet to get to 286 if we're not already done today. Now, after we get this top in, we would get a wave 4 pullback, possibly holding trend line support. And I'm going to mathematically show how easy it is to see this fourth wave occur, especially from the range we've already been to, if not overshot a little bit deeper. So let's go back in time. First, we're going to go back to last year, 2024. We had an initial high on February 26th, did a $10 break into the opening days of March, and then into a final double top on March 21st, where we broke basically from that high to low was a break of 20, what was that again? I'm looking at my map, 28 bucks. We broke. Then, of course, what happened was the fall calf contracts came on the continuation chart, because this was April, May, and the fall calves came out at a high premium and, of course, did their break into the fall. Now, what's interesting, too, is when you look at the April 24 chart, here is your high that occurred on the April contract and then breaking into the month of April, and this is where we see this break that occurred from the 260 plus range to the 236 range on the April contract. So the point is, on this continuation chart, this break here that occurred from here to here was a break of 9%. Now keep in mind, 9% at this value from where we're at right now, that's a break of 25 bucks that could easily occur at any time here on a setback. Now, over on the prior breaks, let's go back to March 9th. This was the most shallowest one from 2023. We jump forward to the 23 contract. This break peaked just under 200, 201, and it broke some $9 into its low. That break was the smallest of all of them. That break was what was that percentage break at that time? 4% break. So nothing really earth-shattering, but when you put it into the 4 average, it helps mute what could really be a substantial break. So moving forward, or shall we say backwards in time, we go back to February 15th was the high in 2022. And from there, 2022 break, we went from a high of 173.52 to a low of 137.22. Doesn't sound like much in today's world, but still it was a 9.5% break. Going back to 2021, peaked on February 16th. Notice how constrained and how low these numbers get. But back in 2021, our break was from 145 to 137. That was a break of 9.5% for this move from here into March before we started moving higher again. Now let's go for some more backwards in time. We won't discuss that the high made COVID year was February 20th, but the break was so, what should we use the word, asinine because of what was happening, that in the end, it was a break from February 20th. You need to be acknowledging that, but COVID distorted these numbers. So I did not use these numbers into our quotes. We can go back farther in time, take a look at 2019. Here is February. We had a February high, a break into March, and then the fall contracts came on at a premium again. Go back to 2018. Here's February. A February high, broke hard into April. Are you catching on here? Something happens by Valentine's Day or later that if the cattle market has been rolling higher, the black swan hunting season is wide open and the shotguns are loaded, ready to shoot some kind of black swan. Now let's look at live cattle. Live cattle is making our objective. This is the April contract on continuation. We had said around 206, 207. Well, we got there today. This could be wave 3 culminating with each wave sublet. You can find each count, but notice the parentheses. Wave 1, here's wave 1, wave 2, wave 3, then a wave 4 pullback, and a final wave 5, which this could find its way up to 218, 219, just because when you work apexes, the rule is when you break out of an apex, you add the widest point to the breakout. Well, in this case, it would be $28, and $28 could send us to that 218 range, 217, 219. Maybe that's later in the year. Maybe it's the April cattle contract, but we think we're getting extended here where wave 4 could come into play soon. But you look at the cash market. The cash market is the February contract in about 2 weeks. That's why the February contract is still discounted to cash, because frankly, there's no January cattle contract. There's a January feeder cattle contract, but there's not a January live cattle contract. And the February cattle contract only really concerns itself with the last 4 trading days of February. So this is the April contract here. All it's concerning itself is with the last 4 days of April. That's how far out and far reaching this thing is, and that's why it can look distorted to you when you say, well, wait a minute here. We got a cash market at 212, 214, probably going to 219 now. Well, that may be the case, but the charts, as they're working their future out, they're doing their own game. Yes, they're being pulled higher by the cash market, but they're working it at a discount. So let's take a look at these things here. So go back to last year, 24. Look at this high came in. Initially it came at February, ground higher into the opening of March, and then fell out of bed into April. Now, we can take it back to the prior year, made a high in late February, broke into March. Of course, sometimes those gaps is the jumping over for contracts. Now let's go back in time some more. That was 2024. Here was 2023, and that break into the March time period. That was the April contract carrying the bulk of that load. Let's go back to 2022. Gee, look at it. Here's February. February high, breaking into May before turning higher. Can we go back some more? I think we can. Here's 2021. February high, breaking into March. So I think we've pretty much concluded here that a break of substantial proportion could be in the works. When we took a look at the average feeder cattle break, even using that shallow year, we could easily see a $26 to $30 break from any given high on the feeder cattle market. That means with our current high of 279, let's just call that 280, take 30 bucks off. That's 250. Everybody's jaws would drop right now when 250 just 2 months ago was an amazing price on feeder cattle. And the same thing goes for live cattle. We could all of a sudden go from a 207 board, and the reality could be we could see a board under 200 again quite easily. Remember, the old resistance was 189 to 190 on the feeder live cattle continuation chart, and it sounds insane that we could go back that far. But maybe it's the April cattle contract. We get a high here in February. We break March, April, some black swan event. I don't know, maybe the doors are thrown open to imports much more easily to other countries. Or maybe we finally see consumer demand hit a wall, and just the smell of consumer demand shutting down a little bit creates a big reaction. And we can have live cattle quickly retreat to 190. It's happened before. It can happen again. So again, your risk right in front of you right now is, of course, the inventory data Friday afternoon and whether the tariffs actually do go on February 1st to Mexico or not. That's in front of us. Outside of that, watch out post-Valentine's Day. Odds favor that we could see some kind of significant setback. The question is, from what price high? That's probably yet to occur. I'm Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.